Alright traders, if you thought today's market action was just noise, think again. We just saw a shift that could set the tone heading into the end of April. Let's break down what actually moved the market today, and what you need to watch before tomorrow's opening bell. Hey everyone, I'm Wall Street Forecasts, coming to you from the East Coast after the close on Thursday, April 24, 2025. If you're trading these markets or just trying to keep up, this is the recap you don't want to skip. Let's dive into what mattered today across the S&P 500, Nasdaq, and the Dow, and what might move us tomorrow. Let's start with the scoreboard. S&P 500 closed down 0.45%, giving up early gains after a midday reversal. That 5,060 resistance zone still holding. Nasdaq Composite slipped 0.62%, led lower by some heavy hitters in tech. And the Dow Jones Industrial Average held up slightly better, only down 0.18%, with energy and financials doing some of the heavy lifting. Now, the real story today wasn't the index levels, it was rotation and rate sensitivity. Breaking news and economic data. Mid-morning, we got a weaker-than-expected initial jobless claims report, coming in at 235,000, the highest in 5 weeks. That stirred up talk of labor market cooling, which usually softens rate hike fears, but not today. Why? Because Fed Governor Michelle Bowman threw cold water on the idea of rate cuts anytime soon. In a speech around noon, she said, "Inflation remains above our target and we're prepared to maintain restrictive policy as long as needed." That sent yields ticking higher and the tech-heavy Nasdaq rolling over. Bond market took notice. The 10-year Treasury yield jumped back toward 4.42% by the close. Let's hit the standouts. Tesla, TSLA, dropped 4.7% after Elon's Q1 call fell flat. Margin compression and weaker China demand were the red flags. Meta, actually climbed 3.2% ahead of earnings. Some big options volume hit the tape there. On the flip side, Chevron, CVX, and Exxon led energy higher, as WTI crude pushed above $85 again. Sector-wise, energy was the only sector solidly green. Utilities also saw some inflows, likely that flight to safety play. But tech and consumer discretionary both lagged badly, down over 1% each. And speaking of unusual volume, keep an eye on Advanced Micro Devices, AMD. It saw 175% of average daily volume today, likely positioning ahead of earnings next week. Something's brewing. Technical levels to watch. Alright, let's get into the chart side. The S&P 500 continues to respect 5,060 as near-term resistance. If we break below 4,980, next support sits near 4,945, the 50-day moving average. Nasdaq 100 has a critical line at 17,350. We tested it twice today and bounced, but momentum is waning. Watch for a breakdown. The VIX ticked up to 16.9, still low historically, but creeping higher. Could signal more chop ahead. If you're a swing trader, tomorrow's open will be key. Futures volume is telling me we might test those lower supports early, especially if PCE inflation data on Friday comes in hot. So here's my take as we head into Friday. This market wants clarity, but it's getting mixed signals from the Fed and the economy. Until we get that PCE read, expect more defensive positioning, maybe even some profit taking into the weekend. If you're in this game actively, don't chase. Set your levels. Stay nimble. There's opportunity, but the easy ride from Q1, that's over.